or you use Trading View or bar chart, like any charting platform that you can have live data from, you definitely must have. Like if you just trade off your phone with Robinhood, it's like very hard to read the price action live because Robinhood's not really built for that. So definitely have a charting platform so that you can actually, it's easier for you to read it. You can do it on your phone, but if you have a laptop or desktop, it's a lot easier to like go through charts, switch time frames, kind of put on different indicators and things like that. So that's the first thing. Definitely have a charting platform ready to go. Second thing is building your watch list. So watch list, you don't want to like flood it with a bunch of names. So why is that? Because it's very hard to keep track of like 15 stocks in a day, you know? Now, if you condense that to like 5 or less, let's say like 3, then you can kind of just have 2 charts up at the same time, maybe 3, and it's a little easier for you to kind of just manage. Either you are already in a trade or you're trying to get in, a little easier to be able to just manage that. But if let's say you have like 10 and you have to constantly flip through charts and stuff like that, it's very hard for you to keep track of things. So essentially you just want to make things as simple as possible. So for my watch list, like when I'm looking to get into a trade, I have my long-term investments. So usually I look at those first, I watch those like all the time. And then I have like this is like a list of just like tech stocks that I put together that have like good movement, have good liquidity and things like that. That it all depends on you, like how you build your watch list. But have a solid watch list where like these are stocks that you're gonna study every day or like every week. You're gonna flip through the chart, you're gonna look through it, you're gonna look through the different time frames and stuff like that, and kind of really be able to study their moves, because then you'll be more confident in trading them. Like for example, like any sport you play or any skill you learn, like if you just start out doing it, like obviously it's not going to go well, but the more you do it, the more consistent you are with it, eventually you improve and you get more confident in what you do, right? So you got to have a good watch list that you're going to like keep track of and study all the time. You should know like what company it is, because remember you're trading companies, right? So you gotta know what company it is, what sector it's in, and you want to know like its daily ranges. So like what are the potential ranges? So for example, how do I hide these? There's way too many drawings. So for example, Tesla, right? Everybody knows about Tesla. So Tesla, I know on a good day can go like 50 points, like range on a good day. On a crazy day, Tesla can go like 100, right? We've seen that happen before. On like a kind of low volatility day, we know Tesla can move at least 10 to 20, right? And how do I know that? I just been watching Tesla for like more than 2 years. So it's like the more you watch the stock, the more you know like how much it could possibly move. And that could help you pick your strikes, right? If let's say Tesla today is not a huge day, it went from 75 to 11, that's like a $30 move. Like you don't want to take something that's $100 out the money from its current price, right? If a certain stock moves $5, like you don't want to take strikes that are $10 out the money. Like you want to choose your option strikes based on how you know the range. And then reading the chart. So reading a chart is important, and where like you just spot where you want to get in, and you'll spot where you want to get out in terms of price, especially when you're trading options, because you're trading the option moves based on the underlining, which is the stock. So you want to know where you're going to get in and where you're going to get out, right? So if you trade, there's so many different strategies, but one simple way is just knowing where support and resistance is. And support resistance is like high and low. What is the high? What is the low? So it depends what time frame you look at, but if you should always start with like a higher one, like a daily or weekly. Like you can go to monthly if you want, but you should go to at least daily, weekly, right? I'll make this full screen. Why? Because like you want to know like the big levels, like the very important ones. For example, this is like 980 is pretty important because every time it hits 980, it tends to bounce, right? But if you go to like the 5 minute chart, right? The let's say give like a random number today, 1084. Like it's not as like a major level 1084 that's like something very important like all the time. But if you zoom out, like you'll see the major levels. And why are these major? Because like you gotta think there's three groups of people in the market. Like there's people who are in, there's people who are like there's bullish, bearish people, and then there's people that are waiting to get it. So you gotta think about like where are people waiting to get it? Where do people have like their orders? Where do the big institutions have their orders kind of like set? Usually at like the major support levels. So if you zoom out, you see where the major support levels are. That's usually a good way to get in, a good way to buy the dip, right? You don't want to buy the dip on like a 5 minute chart or like a 1 minute chart because that's not a real support. A real support is going to be on these higher, bigger time frames. And how do you tell support? It touches it. And basically what is support? Support is a price that, you know, the price comes down to, and, you know, a lot of buyers step in, a lot of aggressive orders step in and bid the price up. And what happens then? Then people who are also trying to buy need to pay more and more and more, and that sends the price higher, right? So I have like a lot of drawings on the chart already, so I don't want to like mark it up further, but this area right here, 980, great support, right? Another great support area, 1,000, right? 1,000 is like a psychological number. So what are psychological numbers? Usually they're like even numbers, round numbers, numbers that end with like a 10 or 0, or like numbers that end in 100. And why is it psychological? Because like it's just one of those like numbers that sticks out. Like a random number like 1027 is not like a huge significant number, but make it 1030, 1040, that's a little bit more significant, right? So if you usually tell some of these areas of support or resistance are around those like major numbers. Like here it would be like 1110 to like 1120, right? And here would be like 1170, 1200 is a big one that we saw earlier this last week. And then it was all-time high about 1243, which is about like 1240, right? So you got to know where is the support, where's the resistance. You never want to buy or sell no man's land. What is no man's land? Like a price where it kind of just chops. So go down to, let's say, 20-minute time frame. If you just zoom out over, or let's say 1 hour, right? Low key, I learned that the 1 hour is like a cheat code in spotting like solid intraday support resistance levels, right? And you kind of just get a knack of it. Like you kind of just, you watch charts a lot and you study them in your free time, you'll see like where do things bounce, where do things reject, right? Like where do you see a lot of candles kind of clustered in, right? So one would be right here, the 1080, right? We talked about 1080 or 980 earlier. Now 1080 is pretty solid intraday. You see some support here, some rejections and bounces here, a rejection here, rejection here. You saw a bounce here. We saw a rejection here, right? And we saw after we broke 1080 here, it bounced and came back up and fully went on. So you got to know where the support resistance, that's where you want to get in. You never want to get in, let's say, random 1063, right? Random, let's say, right here, like 10, 10, 10, right? You always want to just mark up your support resistance. That's where you want to get it. And where do you take profit? That's up to you. You got to know where you're going to take profit. So this is all like how you plan your trade. So let's say right now, I'm going to plan this trade out. I see your Tesla's resistance is 1117. So I don't want to be buying at 1117 unless it gets over that, right? So where is the next support below 1117? Well, today it tends to support around like 1100, right? 1100 was pretty solid around here. So around 1100, I want to get in. 1117 is where I might want to look to take profit because it rejected there today and multiple, sorry, that's my dog, multiple days in previous weeks. then where do you put your stop? So that's very important. Where do you put your stop? You want to put your stop to say if my profit is $17. Now I want to put my stop where if it goes there, then the trade is done so, right? So let's say 1095. Under 1095 and below, we see things tend to dump, right? So under 1095, that's my stop. If it goes under 1095 and it struggles to come back, I'm done. I'm out of the trade. So what's the risk to reward? So you can use this. There's like a tool on TradingView you can use to calculate your risk to reward. So let's say my entry is here, right? 1100. Oh, sorry. Now my drawings are coming up. So I'll zoom in a little more. And my risk is 1095. So I'll put screw this up to 1095. And my target is 1117. Right? So right here, risk to reward is almost 3, right? I'm risking 5 to make 17. That's a pretty decent trade. So I know if I miss this one, then if I keep using this risk to reward 3 to 1, then I just need to win once to make that back, right? If I lose 5 and I'm looking to make 17, all I need to do is make time to make back the loss. Risk to reward is super important because you don't want to just take any trade. You want to calculate your risk to reward and see, okay, is this even worth it, right? Usually you want to take trades that are around 3 to 1 or 5 to 1. The reason why is because you don't need to win every time to be profitable, right? In trading, like you're not looking to win every time. Obviously, when you put it on, you want to win. Otherwise, you're not going to put it on, right? But you don't know like whether it's going to work out. So if you don't know, but you know that your risk reward is 3 to 1, then that means you risk 1 to make 3. You can lose 3 and then make it all back in your 4th trade, right? So you know, like you're okay losing 1 or 2, knowing that the next win will put you in profit. So that's very important when it comes to planning it out, because you want to have a consistent risk to reward. Like you want to take a 1-to-1 trade, a 5-to-1 trade, a 3-to-1 trade. You're always looking to take the same risk to reward ratio. Because you can't predict like the next one's a winner, the one after that. Like you don't know in what order you're gonna win or lose. So it's all about, okay, if I risk less to make more, then I know my one win will wipe out my losses, right?
Hey, hold on, Nick, before you continue, because I know there's probably people that have questions and stuff. So like, if you guys do have questions, don't hesitate to ask. You know, he's just going through the motions and like covering the things that are very important that sometimes are not the sexiest things to talk about. You know, because everyone just wants to know, like, all right, tell me when to buy, tell me when to sell, this, that, and the third. You know, but when it comes to trading and the longevity, it comes down to surviving and how do you survive risk. You know, so managing risk anyway. Definitely ask as many questions. We're here to serve you guys and try to provide value. You know, a win-win is a win-win. You know, very simple, right? And we want you guys to win. And one of the biggest things that people, you know, make the biggest mistakes on is their risk management, and they're not as honest with themselves. So yeah, guys, don't hesitate to raise your hand. Any questions that you guys have, if you don't want to raise your hand and come off the mic, type it in the chat. And you know, Nick or myself, or you know, anyone else, if you guys want to add the answer for each other, that's great too. You know, so yeah, don't be shy because it helps us. Because maybe you have a question that somebody else has a question too as well, and you just helped them out and made it a lot easier. You know, so yeah, go ahead, Nick.
Yeah, the one that's the strat. So I don't like use strat heavy, but it just helps me look at direction, like the inside and outside bars and stuff like that. Those indicate on Trading View, it's called the strat tools and candle type. And if you look a little closely, I'll zoom in. I have like the full time frame continuity here to like see like, all right, what is the major direction here, green or red? That just helps me like see where things going. Like it just helps me like I do less work when it comes to identifying direction. What's next? So I watch list. You have a watch list. Next is you look at through the watch list and see like, is price near a major support resistance? If yes, then okay, why? What happened? What happened to the stock to cause it to get here? So look up some news, look up some macro news, just understand the environment. Like it's kind of like if you're in a jungle, you need a map, right? You gotta know like where everything is. So and like before you leave the house in the morning, you gotta know what the weather is. So check the weather of the market, like what's going on right now. So we know today, for example, CPI came out, inflation's hot, but Powell said that they'll do what they need to do to raise rates or to combat inflation, right? So CPI wasn't as bad as people thought it was gonna be. So tech is up. So if tech is up, all right, I'm looking to go long today, right? Today is gonna be green. I'm gonna go long. I'm not going short because you don't want to fight the direction. Like if it's a one-way street, you don't want to drive the other way or like you're gonna get cooked. Right? So it's like you follow what the daily direction is if you're a day trader, right? So today is green. All right, I'm looking to go long. What stocks am I looking to go long in? Right? Look at your watch list. Which ones have a setup where it's came off of support, right? You don't want to buy near resistance unless it has like momentum, right? Unless it's like a trending day and it's gonna go. So for example, if a trending day is today, is up. Example of a sideways day, Tuesday, right? You see how Tesla just went nowhere, chop up and down, right? That is not a great. We gapped down pretty hard, but you know we came back pretty nicely, right? That's an example of a trending day. So today, for example, just happened to be a trending day. We know because the first before the market opened, we saw things kind of start popping off, right? Then you mark out where you get in, like where are you looking to get in? So let's say my area to get in was like the 1080 area, right? Or 1070. Let's say if I show you my drawing, I have a support at like 1070, right? So when the market opened at 9, I'm trying to look at close to get to 1070 if I can. If it bounced off 1073, so okay, 1073, I'm up, right? 1073, it goes to 1075, it comes back above 1080, I'm good. I'm in the 1080. Where do I take profit? My next one, 1090. 1090 as it gets close to 1090, I'm gonna think about taking profit. Then you think about your position size. Or are you gonna put on a lot of risk today, or is a day you're not gonna put on a lot of risk? That is your preference based on account size, based on what type of market condition we're in. It depends, right? How many contracts how much risk are you gonna put on? If you're gonna put on a lot of risk, it should be one of those days where like we have a big move, and you know things are just going crazy, right? If it's one of those choppy days where like you see the range has been going too much, you want to take a little bit of risk off. Let's say you had a great week, you made $1,000 or whatever great means to you, 5K, 10K, right? And you don't want to risk all of that, maybe you take off risk, right? So you decide how much risk are you putting up. Then if you're able to buy more than one, you could set several profit targets, like set profit targets to scale out, right? Use the chart to tell you where am I going to get out. So after 1090, I know it can go to 1096, it can go to 1100. After 1100, I know it can go to like 1110, 1125. So these are areas I'm looking to get out. You kind of just scale out. So due diligence before the trade is just marking up your areas of support resistance. If you use indicators, is the MACD, you know, squeezing? Is it crossing over? Is the RSI oversold? Is stock by moving? Is it bouncing off a moving average? You know, use whatever you do to ask yourself, is there a setup? Like, is there a signal to take a trade, right? If you look at the daily, this was like, yes, Monday would be like a 2-2 if you use a strat, right? So you know, it depends really. Like you want to start with macro, like look at things from a big picture perspective, and then start zooming in, and really planning out the little details of your trade. Risk to reward. This is like long position, so this shows you like if you were to enter here, take profit here, stop loss here. This is how to calculate. But you just calculate the distance from your entry to reward or your profit and the distance from your entry to your risk and make it a ratio. Indicator numbers, a strat. Anyone use fibs? Fibs are good if you're getting in on a retracement. So let's say from top to bottom. Like you want to get in around the 50% or the 61.8%. Let's see where are my fibs. So let's say top to bottom. Let's say top to bottom, if it came all the way down to lower under 900, we see it coming back to at least 1064, right? So that'd be a good way to know like where could it possibly come back to, right? Or if you go the opposite way, like let's say we undo that, or we trash this, right? Let's say you missed that entire move, you go from bottom to top, right? The bottom to this top, right? 50% is around this 1048 area, or 618 is around 1,000, right? So these are areas that you want to use to get in. These are mostly just formulas, so they're not like concrete price levels. So use them in conjunction with where your support resistance is, right? These are mathematical. This is a mathematical formula applied to where you're picking the top and bottom. So not saying that it doesn't work, but again, these are numbers that were made from math, not from the actual price of the chart. So you want to use that in conjunction, like use that with your support resistance, right? Best EMA, there's no best EMA. The longer your EMA is, so let's say you put, I'll switch to my long-term indicator. Let's say the closer the EMA is to the price, the shorter the trend is, right? Why? Because it's calculating less time. The longer your EMA is, the less signals it has, because it's calculating it over a long period of time. So if you say you're a day trader, you want to use maybe shorter EMAs, maybe like the 14 or 9 or 21, right? If you're more of like a swing trader, maybe use like 50 or like 72 or like 100. If you're like a more like a long-term like position trader, maybe use like the 200 or the 400, right? You kind of just play around with like different numbers that you can look up like different ways to use EMA. Then you depend like what time frame you pick. So usually people look at it from a daily time frame. That's what a lot of like news and like outlets do. They put the EMA or maybe moving averages on a daily time frame. So you'll hear them say like, oh, Apple came back to the 50-day average, right? That's the 50-day moving average. And then EMA, MA is a simple average. It's just taking that. EMA is a slightly different formula. It follows more like closer price action. So if you're more like an intraday trader, maybe use the EMA. You more of like a longer term trader, you use the MA, right? How to use it? You buy it when it comes back down to it, right? So let's say you use the 72 EMA, right? This is CrowdStrike, for example. You want to buy it as it's coming down to it, and then you see it bounce, right? Sometimes you see it go straight through it, right? If you see it going straight through it, that's you play that direction. You want to go short, right? If you see it bouncing off of it, come up. You see it touch it, and then you come back, it bounces like $1 or $2, like, okay, that's maybe a good time to go. If you see it touch it and it goes right through, maybe it's a good time to go short. When do you actually enter? Is it when the candle break or touches the RS? You want to see the reaction to it. So usually if it touches it, right, you can buy it. If it breaks through it, you can go with that color direction. If it bounces off of it, that's also a good way to get in, right? You can use like some type of confirmation. So that depends what you use for confirmation. So if you're looking at a small, sometimes this can be bad. Yeah. These are all questions that are in the chat. So break or touch. So you can get in when it touches. If you're looking to short, like let's say it's like a bearish day, like that all depends on what the direction of the market is, right? So let's say if the direction of market is up today, you can buy the dip. So you can buy the dip if the direction is up, because we have people also waiting to get in when the stock price comes down. If it's a bearish day though, you don't want to buy the dip. If the day is red, like you see pre-market things are red, you don't want to buy the dip. right? Why? Because it might break through the support. So that also depends on the condition you're trading it. So let's say it's a green day, you could buy it when it touches the support. Why? Because if you wait a little bit, you'll see it touch the support and then come right back up, right? I wish this had like a live thing. Like I have it on NinjaTrader, like a live replay of like how it happens. But yeah, that depends. Like, it's a green day, you can buy the dip when it touches the support. Or if it's a red day, you do not want to buy the support because it might break through it, right? So that depends again on the direction of what the day is, like what the direction is. Great question though. And that, like, obviously looking at this and like planning it out beforehand is different from when it actually is happening, because this, we already know what happened. So psychologically, like, there's nothing we're scared of because we know what has already happened. When we're in front of the screen live and things are moving real time, we don't know what's happening next, right? So things can get a little scary, things can get a little, like, you can get a little fearful, but the more you practice a system or the more you trade it, the more confident you get in it, right? The less like prone you are to just hesitating or not taking it and then seeing it go your way. So the best way to do that, paper trade, practice, right? Back test, look back in time and see when has this system worked, when has it not worked, what kind, like, the more you use it, the more you're confident in it. And that's what it all stems from, having the confidence to be able to trade a certain system. So yeah, great question. Does anyone have any other questions?
Oh yeah, and keep in mind, it doesn't have to be about, like technical analysis or anything about this topic. If you're a beginner, if you're just, trying to figure it out, um, you know, uh, if you're struggling, if you had a bad couple weeks or a bad, month, we're here. So
Yeah.
definitely ask, guys, ask whatever questions you have. Don't be shy. If you don't want to come on the mic, you can unmute yourself, and we're going to try to provide as much value as we possibly can with the time that we have. Lovely girl. Actually, Hunter is going to teach about the Greeks. She's a master at the Greeks from the front to the back. She already has training session videos, but she's also going to do a live training session tomorrow. I'm pretty sure she's going to do it via Instagram. So definitely follow us on Instagram and tap in, and on the Profit Rocket Club Discord as well. She's available. Just hit her up, and that the training sessions that she has about Greeks, super, super dope.
Yeah. One tip with Greeks is that's gonna help you just know how the contract is gonna move. If you go at the money, usually your delta is about 50. You go out the money, like the further out you go, the delta is gonna be decreased. When you're in the money, the delta goes higher. But data, as time decay, the closer it is to expiration, the data is gonna be higher. The further out you go, data is gonna be less. So that depends, like, how much time are you gonna give it? How much time are you gonna give yourself? Shit, like, you never want the time to you never want to be time to be an issue, right? If you're intraday trading, you could buy the weekly. If you're not, if you're holding it, don't buy the weekly, right? Because remember, when you're trading out, you're fighting against time and price. Those are two enemies you have to fight, right? So you don't want to make time an issue. So as if you're a beginner, I would say buy a week in advance, 2 weeks in advance, a month in advance, right? Yes, it may be a little more expensive, but you don't want time to be an issue. Yes, the weeklies are cheaper, but you don't want to buy a weekly on Thursday, right? When it expires the next day. You don't want to buy a weekly and hold it overnight, because now the chance that the price will strike by the time it expires is less and less and less as time goes by, right? So this is all probabilities. You always ask yourself, what's the chance that the stock can hit this price in the allotted time? If it's a good chance, go for it. If it's not a good chance, don't take it. How much time do I need for this? That goes back to what we discussed in the beginning. how much can the stock move, right? If it's, let's say Apple, we know Apple goes like $2-3 a day. So don't take like, let's say Apple's at, what is it, like 175. Don't take the 185 to 190. What's the chance is actually going to hit that, right? Take the 175 at the money. Take the 180, right, at most. Don't take something that is unreasonable, right? Yes, it's cheaper, but you want it to have at least a good chance of your contract to potentially go in the money. And that's where the real gains really start print, is when your contract goes in the money. For example, right? Tesla dipped yesterday to 980, right? You could take the 1,000, right? The chance that Tesla can move $20 is pretty high, because you know Tesla is volatile. You take the 1,000, where are we at right now? 1106. That contract is $106 in the money. That's an example. You don't want to take the 1,200. 1,200 is all the way up here, weekly especially, right? What's the chance of Tesla hits 1,200 in the next 2 days, right? Less and less as time goes by. So go closer to the money and buy more time if you can, especially if you're a beginner, because you don't want to risk your money on cheap weeklies because they're cheap, or because, you know, in the past that Seven or Chef Money has these crazy trades that print 1,000%, right? That doesn't happen all the time, right? So go closer to the money with more time when possible. Sweeps, blocks, which flow is the best to buy? I could define like what they are, so we could add on to it. Sweeps is like a consolidation order. So imagine like someone puts out an order for a lot of contracts, and it just sweeps the entire market into one order off of different exchanges. So you know how the country doesn't run on just one exchange. There's like different exchanges in the country. It like puts in the order and sweeps up contracts from the different exchanges into one order. A block is like more like a kind of like off the table kind of order. It's kind of like a sweep, but it doesn't consolidate it all in one order. It's mostly just like on one exchange. And the best, like personally, I like to look at the golden sweeps, because those like the 1 milli orders. If someone's gonna put 1 million on the line for something, that's something you want to pay attention to. You don't want to buy the same order unless there's like you've done the due diligence and it makes sense to, like, because you don't know like what is it, like when they're gonna exit. You don't know why you're even getting in the first place. You don't know what their plan is. You just know the order. So like what Seven does, he looks at the flow, and then he does a DD on the chart, like, you know, and look at the news and the upgrade, like the analyst ratings and stuff like that. So it's a tool that you can use to add to your analysis, but don't just take it off rip. You know what I mean? Nah, I tapped into like a session like a couple of days ago. That's exactly what you said, dude. But like let's say you see a random sweep come up, like don't just buy that because someone else bought it. Like use it to add, like to announce. If you see multiple sweeps come in for the same thing, for the same strike, for the same contract, that's like like someone's being mad aggressive, right? So something might happen in the future. Open interest is just the number of contracts that are in the hands of buyers and sellers. So the number of contracts that exist out there. You want to go for like higher open interest, not because like there's a chance of it hitting it, but more so there's more liquidity, right? So the more contracts there are of something, it's easier to get in and out, right? Because that means more people are trading that one. So let's say something has an open interest of like 1,000, and another one has an open interest of like 80. One has 1,000 contracts, one has 80 contracts. You're more likely to get filled and get good fills, and then get in and out on your orders on the contract that has 1,000 out there that people are actively trading, and the one that has like 80 and no one's really like quote unquote interested. You know what I mean? So OI doesn't mean like it's gonna hit this price. OI just means there are this many contracts that exist, right? And how do contracts exist? People have to write them. People have to sell contracts, right? People have to make them up. So you have to have 100 shares of a stock, and then you write a contract for 100 shares. You're willing to buy it or sell it at a certain price, right? So yeah.
Hold on, somebody asked, How do you find, or where do you find good plays?
What does that mean?
Exactly what the question is. Like you said, how I find plays, but with the sweeps and everything, and you know,
Oh, like
how,
how do I find players?
yeah.
Oh, so I mean, usually I try to keep it simple. Um, you know, I want to buy in good market conditions. What is good market conditions? When things are like have a solid direction. So right now, as Seven likes to call it, things are in like Hall of Fame. There's no real direction. We've been kind of just in a range for the past like couple weeks now. Um, so you got to assess like what the market condition is first. That's what I do. And then same process told you earlier. Where is support resistance? I try to keep it simple. I try not to use like 1,000 indicators and things like that. I just say, where is the price at now, and where is price likely to go next? Likely. So I'm not saying the price will go somewhere. It's likely, because remember, you don't know what's going to happen next. You just can try to test the likelihood of something moving in a certain direction. So I try to trade like the ones I'm already invested in, and then a couple picks that I have that like I've just been watching a lot. So I like Tesla, Microsoft, Apple, Square, Nvidia, Amazon. I mean Tesla, Amazon have high premiums, so I tend not to trade them. It's like big move. Those premiums are expensive. I can probably buy only like one or two at most, versus like Apple, I can buy like 5 or 10 of these and be able to scale out, right? Or Microsoft or Nvidia, I can buy a couple, right? So how much risk am I going to put up? So that depends on, how is my week so far? How are my last couple trades turned out? Like, how am I feeling? Like literally, how am I feeling today? Like, am I feeling confident? Am I feeling good? Did something happen to me? What kind of day is it? Is it risk on or risk off? Like risk on, like people are buying a lot, or risk off as in like people are selling a lot, or is it like a low volume day? If it's a low volume day, I don't want to put on massive amounts of risk. If it's like a high volume day, like a Monday, Friday, I might put on a little more. And then what's the direction? Most important you ask is what's the direction? Up or down? Keep, up, I'm buying calls. Down, I'm buying puts. Then once I know what the direction is, all right, where do I get in? Buy low, sell high, right? Check the option chain. Which contracts have good liquidity? Good liquidity as in like I can get in and out. So you never want to trade something where like you keep canceling and putting the order back in and you never get filled. That's like the most frustrating thing, right? Trade the contracts that have a lot of volume, a lot of open interest, a little easier to get filled. Then what's it called? Then figure out, like I said, where's the entry, where's the exit, where's your stop? If you buy at a support, make it like the next support down, right? If you're selling at a resistance, make it the next resistance up, right? So I buy it at the support. Let's say support for Nvidia is like 270. I'm gonna look at the buy at 270. My next exit is around 280. So that's $10. How much risk am I gonna put up? Next support under 270 is around 267. So it's like $3 risk, right? $3 risk. I'm trying to make 10, 3-1. Great. I have my risk to reward. Looks good. I get in at 270. If it falls under 267, I'm out. If it gets to 280, I'm out. Right. And that's how you plan out your trade. You always need to have where you're going to get in, where you're going to get out in advance. You need to know the direction. Another tool I use is optionstrat.com. I'm going to show you guys the website. So you go to, optionstrat.com. You could make a free account, and then create call or put, and then type in a random ticker. So let's do the same on Nvidia. the dates are up here, right? The strikes are here, right? So you can, this is 280, you can hit the 300 and stuff like that. This table shows you what the potential profit and loss is, or what your contract value is. So let's say right now, NVIDIA is at what, 280. So let's say I buy the 290 call. Let's say I buy the 285 call expiring next week. It's gonna cost me 500. Now, this chart shows you your value. So if it goes to these prices on the left, the number tells you what value it will hit, right? So I'm looking to hold this until next Monday. So at next Monday, right, this is where I'm looking to get out. So at the open, let's say NVIDIA goes to 290. This is going to be worth 984 from 553. Good profit, right? Let's say NVIDIA perhaps goes down to, what was it, 277. Then this 363, I lose 190, right? So I'm looking to make about a little over 400. I'm risking about 200. That's like, I'm risking 200 to make 400, kind of like that, right? You can use this tool to look up the different contracts. You click the contract, it'll tell you like the volume, the Greeks, OI, all that stuff. This is my favorite part. You click historical chart, and then you look is compared to the stock. So this is, okay, let's say the Monday, these 285s were going for $2, right? And the last time they were at $2 was like mad long ago. Like in October, right? So it's back at $2. And you can either look at support, resistance, buy low, sell high, right? So buy low, right? For example, here is just like random support area at 12, buy at 12. Next resistance is like 21, right? That's an example of option premium. So use this to look at the premium, to look at where the premiums are low and where you can potentially sell them at. So if you see here, the option went from 2 and it went all the way to 8. So you can look at this and find these like 200, 340, 400% bangers, right? Using the premium. And why do you want to use this? Because like you're trading the option, you're not trading the stock. If you're trading the stock, you're only focused on the stock chart, right? If you trade the option, you also need to look at the premium and see, okay, where's the premium now? Where has it been? And where can the premium go, right? Small tickers. So you can answer that. How do you look for those small tickers? Because I don't really trade them.
Yeah, sure. Like what, like small tickers, like I guess under what, $30 or so.
Yeah, I guess.
Yeah, for me, I really just look for what I know, so I don't really fade away from what I know unless I see something obnoxious. Flow, so like how Nick said with the call sweeps and stuff, I watch it pretty often, right? So like when I see something that's like unusual, 100,000, 200,000 on, they're paying 15 to 20 cents on whatever what the ticker is. I'm like, okay, that's interesting. Why is there so much aggressive buying? And then from there, then I start doing some other analysis, and I'll start checking. I'll do support and resistance. That if is it in a downtrend? Is it, what kind of pattern is it? Double bottom? Is it a bull flag? Okay, then I'll go through my checklist of analyst ratings and their price targets. So is it underweight, outperform, overweight? What's their ratings as far as buy, strong buy, et cetera, et cetera. So I'm just kind of like just going through the market. I look at a lot of stocks, or I have, and I'm familiar with a lot, right? And then I just stick to what I know from a day-to-day basis, unless something hits the tape. And then I'm just like, okay, this is interesting. Let me check this out, right? I also use my resources, like in the Discord and Profit Rocket Club. We have different bots that grab information from different places, like Twitter, for example. Twitter's a great resource of information. And sometimes there can be some news that come up, and it says, oh, this ticker is up 20% or 15% or whatever. Now that's a lot. And sometimes it just so happens to be that some of these tickers are on the smaller scale that are affordable for everyone. So even if I'm not familiar with it, I'll take a look at it, and then from there, then I go through my process of due diligence, right? So that's really like my main way. But it just comes down to information and exposing myself to things that I'm unfamiliar with. And I do that just through the flow and everything else that I mentioned. But generally speaking, I do stick to what I know. And because then it just gives me more confidence to actually trade them. So I hope that helps. Like
Yeah.
like NXTD, like this will be the last thing on that. NXTD today, it was going crazy, right? There was like money flow coming in. There was money flow that came in last week where I looked at it and I was like, I didn't really know what it was, and it's like, okay, whatever, but everything is a joke kind of until it's not a joke. So you could look at it at a chart. You can be like, okay, this looks weird, or I don't really understand it. Cool, ignore it. You come back and look, and then it went crazy for a couple days in a row. It's just like, you know, I try to take that into consideration because I know that I do that. So when I do something that's unusual as far as call sweeps coming in and it's in harmony with like different market news and catalysts, then I'm just like, okay, boom, I want to check this out and then I want to play this play. So that's how I move in that regard.
Yep. And like, main part of the story is like, you gotta know what the direction is. With options, you're playing with direct. You're just trying to get what the direction is. You gotta know, like, think of probabilities. Like, always think of probability. What's the probability that the stock could get to this price in X amount of time? If it's a high probability, right? And there's like news, there's flow, you're at a good price, right? There's momentum in the market. It's a good market condition. Go for it.
Right. Like everybody's
Yeah.
going to talk about Amazon. Everybody's going to talk about Tesla. Everybody's going to talk about, even the memes, even GameStop and AMC. Everybody's going to talk about, the things that have had earnings and, they're going crazy, whatever. But I'm definitely an enthusiast for supporting things before they're cool. Now, of course, sometimes you want to ride the wave. That's just momentum trading, of course. But, supporting things before they're cool, it's a great feeling. And it just comes down to just looking like searching for different plays that you're like, oh, I know this company, and doing my due diligence, this is gonna go soon. And you get that information of the flow that comes in, and I call it sneaky link flows. It's like, why the hell did somebody put in 300,000 in this play when everybody's looking somewhere else? You think I didn't see that? So I just kind of rewired the way that I move and the way that I gather what tickers I want to play, so then I can find those that are not popular. Because sometimes you just never know, and there's catalysts that are coming, and then once it becomes popular, everyone starts to FOMO it, i.e., Zynga. Zynga, they announced a partnership with Disney. Nobody gave a shit, and that was a couple months ago. Actually, that was in December. I actually really like Disney. I'm a Disney enthusiast. That they were creating games with like Star Wars and other stuff like that, whatever. And I like Marvel a little bit better, but I thought that was pretty cool, right? And I was familiar with Zynga before. So then they announced another news. Now they're talking about a partnership with Nvidia. Guess what? Nobody cared, right? It's just like, all right, cool, whatever. But I'm just using my sentiment and what like I think makes sense and what's meaningful to me. And I'm just like, no, like this is dope. This is gonna go at some point. And long and behold, it exploded, right? Like it got bought out. Like there was no way to really tell that, but I put myself in a position to support something before it was cool, and it got rewarded. And then even after, it still continued a little bit, just by people buying it up and not letting it fall. So yeah, like you just got to play what you know, and just the more time you put yourself in the market, the more you'll become familiar with different tickers, and then you'll be like, oh wait, I've seen this before. And it's like, the tickers don't like, it's not very common for a lot of tickets to just fall off the face of the market and disappear. Of course it happens, but you know, well, the more time you put in, the more you familiarize yourself with things. And you're like, oh yeah, I know this. And then that's how you execute. And then you find out news and find the meme ones like what, like Funware and DWAC or whatever. Like those came out of nowhere and just came with crazy volume, and now people know them. You know, it was difficult to kind of support that before it was cool, but you know, maybe people forget about it and then it starts going crazy again. You know, so just the time that you put in the market, really. Somebody who's a beast at finding like low tickers like that, who, you know, I'm trying to learn how he does it, because just add it to my bag. Not that it's better or worse, it's just different. But he's so good at it. And that's Moneybag Crow. Like I'm like, man, how do you find some of these things? It's crazy. But you know, he just has a system that works for him. And I just have mine. But it's always good to support it before it's cool, and then you just pull the trigger. But yeah, go ahead, Nick, take it over.
The website I just put in chat, it's called optionstrat.com. Hunter uses it a lot for spread plays. And you'll probably find those like screenshots of like the premium table. What moves with QQQ and SPY? You can just look up top 10 holdings. So SPY, you know, most of the S&P is made out of Apple, Microsoft, Google, Amazon, Facebook, Tesla, Nvidia, JP Morgan, Berkshire. So what moves with SPY? Usually like market, like big cap stocks move with the market. That you can just overlay the chart of like that and then kind of see like how does it move. Different order types. Great question. Stop limit. So what is stop limit? Stop limit is there are two prices you put in, the stop price and the limit price. So what's the stop price? Stop price is the price has to come down to this price, right? To trigger, for it to send the order out, right? Then the limit is what you're actually trying to sell it for. So let's say your premium is $2. Your stop is 150. So you want to sell it when it gets down to 150. So you have to put the stop price, which is like the trigger number, a little bit above that, because you don't want to put it at 150 and sell it for 150, because what if it moves so fast that it goes through 150, now it's at 130 or $1, and it's like, damn, you just missed out. Your stop never triggered, because remember, this is an order. It's not a guarantee that, you know, you're gonna get out at a certain price. So my general rule is put $10 in between. So if you want to get out at 150, you want to put a stop at 160. So 160 stop price, stop limit 150. So if it hits that 160, it should sell for 150, right? Because if you look at the liquidity of an option, right, the bid and ask spread, it's usually about like $10. You see here Square for next week, 150 call, bid is 68, ask is 77. That's like $9. So the spread is like usually for liquid options like this, $10. So keep that, like you always want to have a spread between the stop price and the limit price, so that if you know, to protect yourself, you don't want it to blow through your stop. That's like the worst feeling ever. Regular stop is like it stops at a price and it sells it for market. Market order is like it sells it for whatever price the mid price is at that time. That's like if you're trying to get in right now and you're trying to get out right now and you don't care what you're getting in or out for. You don't want to always use those, but if it's like one of those like urgent things, like you're in like mad profit, like, okay, market order, get me out of here. Or if it's like, I need to get in right now, okay, market order, let me get in. But usually you want to use like limit orders to get in and out, just so that you're getting in and out at a specific price, not just what the market maker is going to fill you in that. MOC, is that market on close? That's just like when market's about to close, like where's most of the volume allocated, like the buy side or the sell side? So are there more sell orders or are there more buy orders? LOC, I'm not sure what that is. Limit on close. Yeah. What's a good workflow? Good workflow for due diligence. I usually check the news and we go to hit Twitter, Yahoo Finance. Like how do you like study? So again, study the macros, study what is happening in the economy, like what's happening in the world right now. You know, like what are the big themes of the market right now? You know, what is the Fed doing? Like what politically are there any like tensions, right? And then what is the overall market doing right now? What's happening to it? Like what is affecting people to make certain decisions, you know? Then you go into sector based, like where are the hot sectors, where are the, you know, bad, like down sectors. Then within those sectors, you have your stocks that you're watching. So let's say I trade like in tech heavy, what is happening to tech? What are the risks that the tech sector faces? And what are the like kind of things that make the tech sector go hot, right? One thing is inflation, another thing is interest rates. Another thing is just overall just market news, right? Yahoo Finance is good. Twitter, if you type in the ticker symbol, like usually there's like certain a lot of people post headlines. Weibo, I don't really use Weibo like that, but if there's news in Weibo, you could use that. Market Watch, CNBC, Investors Business Daily, Barron's, like any news outlet you choose, Bloomberg should have like major market news, like what's happening in the overall market. And then individual stock, you could Google the stock and just type in what news, check out what news is popping off. So yeah, you study macro, what's happening to the overall market, what's going on with the Fed, what's going on with the Biden administration, right? What are things that could potentially affect the stock market? You ask yourself that question and just go out and, you know, read some articles about it. In America, what's happening in China, you know, like what's going on in the world. And you zoom into the US market, well, what's happening to this sector? And then within your individual watch list, like does that news affect my stock, you know? And then you look at your individual stock news. Are there any recent news, any upgrades, analyst upgrades and downgrades? There's a channel for that at Discord. That usually causes stocks to move, right? Unusual whales, that's also like picking up flow. So, you know, you use as many tools as you can, but don't confuse yourself of what you're gonna do. You know, like don't have what we call analysis paralysis. Like you did so much studying and you're finding so many different reasons as to why you should buy or sell, and you never do it, right? So keep it simple, have a thesis, have like a set up a plan and just go with it. Whether it works out or doesn't, on to the next one, right? Like Seven says, it's about longevity. It's about you doing this on a weekly basis, on the weekends. You study during this time of the day, not during market hours. So then during market hours, you execute. What happens, market close, reflect, see what, you know, what happened today. How did I execute? Did I, you know, did I follow my plan to the T? If yes, great job. Give yourself a high five. If not, like, yo, why didn't you do that? You know, what triggered you to deviate from your plan, right? And then, you know, look at the chart. Where did you get in? Where did you get out? Was this according to plan? Did you execute the right way? Did you hesitate? You know what I mean? Did you hesitate at first, or were you fearless and you were confident in your setup? You know, these are all things to keep in mind on a daily basis. This is mostly mental. Like all of this is just mental. You have all the data, all the tools possible. Like imagine like 50 years ago, you had to draw these charts with a pencil, right? So it's like you have all these tools available to you. Use them at your discretion. Keep it simple though, like just have a plan and have, you know, reasons why, because again, news gets digested by the market and it moves on, right? So don't 100% depend on news, don't 100% depend on flow, don't 100% depend on the chart. Just go with the plan, go with the setup, have a good risk to reward. It works out or it does not work out. Only two things can happen, right? SPX is like SPY, the contract's a little bigger, but the reward is bigger because you're you know, SPX is measured in a bigger amount compared to SPY. I trade something similar to I trade the futures, the ES futures. That's a little bit different. You could save that for another day. But same thing, right? Support resistance. If you're trading SPX, you're trading the market. So what's happening? you have to know what's happening to the market, which is more affected by like macro news rather than like individual stock news. So just pay attention to, that's why a lot of people like trading the index. It keeps it a little simpler. You're not biased towards the stock. Market goes up, you're long. Market goes short, market goes down, you're short, right? And strikes, like, pick the closer to the money possible. If not, know what the range of the SPX is. SPX, I know, moves around like 20, anywhere from like 20 to 40 points in a day. On a low volatility day, it's something like this. It's like like a 20 point day. On a big day, right, it's like 51 to 13. That's like 4653 to 56. That's like 100. So it's like you gotta know how much it moves, so that helps you with strikes. Then that helps you plan out your trade. And hey, study it, practice it. Like, get confident in trading the SPX, and eventually you're gonna get it down. If you're not trading SPX, you trade SPY or you trade QQQ. What's up, PD? Can he unmute himself? Oh, ask to unmute. That's how I do it. Did I do that right? Okay.
Yeah,
What's
I
up?
have a question. My question is, okay, once the market closed, what is your guys' next step for the next day, for the next market day? Like, how do you guys get prepared for next day?
How do I get prepared for the next day?
Yeah.
What I do is I just reflect. First, I reflect. Like, what happened today? What did I do? Did I do the right thing? Right? If I did the right thing, great. Let's do it again tomorrow. Right? If I didn't, why didn't I follow my plan? And then kind of look to see, okay, what is there any news, report, economic data happening tomorrow? Any important events related to the certain stocks I'm watching happening tomorrow? And then you do what we're doing right now. Pick 2 or 3 stocks that you're going to watch for tomorrow. Mark it up, support resistance. Does it have a setup? Yes or no? If there's a setup, great. I'm going to watch this tomorrow, see how it plays out. Right? Don't stress yourself out, and then read. Like, go read one of the books that you're currently reading. If you're a video person, go watch like a video that go watch like a video related to something that you're trying to learn more about. Or you can literally just sit here on your charting platform and flip through as many stocks as you can and just kind of study them, right? But it's more so downtime, you know what I mean? Like, have some downtime. Don't treat this like an all-day thing. Like, have time for yourself and what you like to do, and then think about like an hour or so of your evening and just kind of look for your setup for the next day, right? Like, what happened today? You're green, great. Tomorrow, is it likely we're going to be green again? We don't know, but let's look for some stocks that were green today and could likely continue for tomorrow, right? Yeah. Any other question? That was a good question. 7, how do you prepare for the next day?
Yeah, man. So for me, I take the market bell rings, ding, 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 ding. First thing I do is grab a glass of water and try to, clear myself and chill. And then once I come back to my computer, and then I just go through the day, what trades I took, what mistakes I made, what did I do well, so I can just have an analysis on myself. I can't analyze all these different stocks and tickers and not analyze myself, right? So then I start making that just self-reflection so I can focus. And then I just start diving in deep into like, okay, what potential strikes am I going to play if X does this, right? What am I like? I'm always looking for my next play the day before it happens. Sometimes it happens, sometimes it doesn't. I'll manage like my watch list for like my long-term positions, so because I have multiple accounts. So I'm just like, okay, let me see. You know, I have a Gap in an account. I have Crafty in an account. And I never really look at it. So I just go, okay, what's happening here? Cool, let me check that out. Um, what has earnings coming up? You know, we're about to enter earnings season soon, and that's going to be absolutely insane in great ways and horrible ways for others, right? Where like we have Tesla, Amazon, and just all the big names. It's about to be tech season. And I literally sit there and I'm like, okay, what has earnings coming up? Okay, this has earnings in 3 weeks. So this is they're going to be on the back burner until we're a week out, maybe 2 weeks out. And I just start making decisions like that. It just comes down to proper planning. You know, when you stay ready, you don't have to get ready. So I'm really just practicing my checklist of the things that I do normally when the market bell is open. You know, like when the market is open, I don't just, stop. Like the job's not finished because the bell rang. I got to keep going and keep practicing and keep looking for something else. And sometimes that's an extra 2 hours. Sometimes that's an extra 30 minutes. Sometimes that's an extra 6 or 7 hours, right? But Lau knows that like we've been on the phone for almost 4 hours planning for the future. And, that shit, it could be mentally draining at times, but the end justifies the means. I know not everybody has the same type of availability. Like, I don't have kids, but maybe somebody else does, and maybe somebody else has other responsibilities, that requires them to not to be somewhere else, that they can't be on their computer, and that's understandable. But it just comes down to like you got to get it in at some point, where it fits in, and that's a game changer. So I hope that answers your question, Petey. Yeah, no problem.
Yeah. How long does it take to get a grasp on charts? I'm not gonna lie to you, I remember Robin Hood watching it.
Wait, what? Are you serious?
Yeah, I didn't know what a charting platform was, so I was on Robin Hood, like watching the squiggly lines.
You're a menace.
Yeah. And then I went to Weeble, and then I was like, "Oh, it looks so cool." And then I still didn't really have a good grasp of it. But first, just understand the basics of what type of chart you're watching. If it's candlesticks, just know what the candlesticks are. You need to know all the patterns and stuff like that. Not really. But it's more so like how often are you watching it live and like looking at it aftermarket? Because those are two different things, right? If you're watching it aftermarket, you're looking at things that already happened. So it's like it's a little easy to see, oh yeah, I buy here and I sell there, right? But if you're watching it live, it's a whole different feeling because you don't know what's happening next, right? So you should have time for both. And say you're like a full-time worker, you don't have time to watch it in live. Then study it as much as you can to just know the prices that you're looking to get in and get out. And then when you're watching it live, it's just important to see like, oh, how is it actually reacting to the support resistance levels that you're looking at. And that's pretty much it for chart reading. Like, you don't need to know all the things about technical analysis. Like, you're not an institutional trader, I mean, you're a retail trader, like you want to trade like an institutional trader, but like you don't need to know everything that is about technical analysis. You just need to know the simple basics, support resistance, maybe choose one or two indicators that you want to throw in, like a moving average or like a MACD or something like that. And then pick a time frame. Remember, the market exists on different time frames, so pick a time frame that you're going to study and just go with it. It all depends on how much time you put in. Just like any skill, the more time you put in, more successful you're probably going to be at over time. So but at the same time, you're like, don't overcomplicate it. Like, don't learn everything there is that you need to and then not use all of it, right? It's good to know like a lot about it, but just focus on simple things, right? Keep it simple. Well, you're just looking at price. You're looking at the price of where it has been in the past. And it's like, what tools do you use to kind of study where it has been? Those are questions you ask yourself. And then at the end of the day, what are you going to do with this? What are you going to do with the analysis that you have done? Like, are you actually going to use it in your trades? But essentially, you're looking at where the price has been in the past. It doesn't give you where it's going to go in the future, but things are in probabilities, like I talked about earlier, right? There's a chance that it can go lower, or is a chance that it will reverse, or is a chance that it can go higher. What are the chances of these things happening, right? So that's pretty much what I have on charts. What about you, Seven?
Hold on, I stepped away for a second. The question, what was the question about charts?
Yeah, like how long did it take you to get a grasp of like charts?
Oh man, yeah, this shit took me forever. But it was just because like I uh I was kind of overcomplicating it. So the way that I learned was just watching a whole bunch of YouTube videos, but from the right sources, and then practicing with a community of people that I used to trade with. I used to trade with them every day, and it would help to see what other people were doing, and I wasn't afraid of being wrong. So I would ask for feedback, or maybe I would just share an idea, and it's like if people I'm not even gonna lie. I would think to myself, well, if nobody says anything, then I'm probably right. And and it used to happen where I'm like, oh shit, okay, I'm starting to get it. This makes sense. Cool. And then I just started. I started with only two indicators, which is the RSI and the 200 moving average. And then, as I got better, I added the 20 and then the MACD and then Bollinger Bands and so on and so forth. But yeah, like when I first originally started, I wanted to have all these different indicators on that I didn't understand, and all these squiggly lines everywhere. And it was like hieroglyphics. So I really just absorbed the right information. And I just asked a lot of questions and surrounded myself with people that were doing similar things that I was doing, uh, that were committed, that were, active in the actual like growth process and willing to learn process, because then I felt like I could be a part of that group and grow together as well. So that was a game changer for me. And then literally once I started executing and started consistently becoming green, then I was just excited and motivated to keep going and keep learning, because I'm like, yo, I got it, I'm learning it, it's sticking. So that's how I did it for me. Yeah, definitely will. It should we can upload it later tonight.
Yeah, um, definitely. Yeah, it all goes like how much time you put in, and are you open to learn, and then how are you going to use it? Like, those are three things you want to assess or ask yourself. Like if you're an intraday trader, cool, study like the little smaller time frames and watch price action. If you're not an intraday trader, you don't need to study the smaller time frames. You just go to larger time frames. Um, so yeah, that's pretty much it for charts. Like
Yeah.
continuously learn, and don't force yourself to like learn everything about it. Just pick your niche, like pick the area that you're focusing on, and spend some time every day on it. It's kind of like the gym. Like, in order for you to get fit, you gotta exercise every day or at least a couple times a week, right?
Yeah, no, literally, and then this will be the last thing that I'll leave you guys with, and that this is perfect timing for sure. Um, it was difficult, but just remember, guys, like remember your why. Why are you even trying to learn charting? Why are you even trying to trade options? Why are you even trying to trade and invest in the stock market? What's your purpose? Everybody has a different purpose. For me, it was the end justifies the means of how I want to be a producer for myself and for my family, right? So quitting is not in me. And no matter how hard it got, I just kept going and kept showing up. Another resource that I would recommend is Juicy Trades. Like I would watch his videos. He has a lot of free content. I'm just like, yo, I gotta figure this shit out. If he could do it, I could do it. If she can do it, I could do it. I just gotta keep putting in the work and move with unswerving confidence. Never forget your why, because there's trials and tribulations, but a lot of people don't talk about the triumphs. It's like, nah, man, don't feel sorry for yourself. You fucking did it. Nobody could take that away from me. Hell yeah, it was hard. Hell yeah, I was frustrated. Hell yeah, I wanted to be like, yeah, forget this. But nah, I saw it through. I kept going. And then I ended up being triumphant. So it was just It's just a matter of keep showing up every day. Keep showing up, keep showing up, keep showing up, even if it's 20 minutes, 30 minutes or so, you know? So um appreciate it. Thank you. And I'm just passionate about these things. I'm not even trying. I'm not reading from anything, I promise, guys. But yeah, exactly. Exactly. The score is 0-0. You know the vibes. So, you know, we're not playing to lose, we're playing to win. And Peter, you can find them on Twitter. It's literally just that. I don't know if he has any other things, but if you can't find them, send me a DM and you know, we'll take it from there. If you guys miss access to like uh the links that we shared earlier, definitely just tap in here. We have the resources to the Instagram, the Twitter, the official website, a whole bunch of other stuff that we're still working on. But yeah, Nick, if if you wanted to say anything else before we close out, um, this was a great session, guys. We're going to do this more often. If you guys were here for the ones a couple of days ago, we was rocking and rolling. Don't hesitate to ask and let us know in advance exactly what you guys want us to cover. We're here for you guys, and we're trying to make it fun, even the non-sexy stuff. Like we can
Oh,
have
yeah.
fun learning about the market. You know what I'm saying?
Yeah, maybe next time we talk about like psychology or something. That's like a big thing that a lot of people overlook. But
Yeah.
yeah, I would say if you're new, this might seem like a lot and complicated, but over time it probably will get simpler and simpler. Um, a lot of these terms are like different, but the more time you spend studying it and kind of just embracing it, the more it will become part of your life. So, like Seven said, like, why are you doing this in the first place? Why are you even invest your own time into doing this and going through the trials and tribulations? Because like it's not going to be easy. Like that's my Twitter. I don't really post on Twitter, but y'all can like send me messages and stuff and ask questions. It's not going to be easy. Like at one point I almost quit. Like I was telling myself, like, dude, I messed up so bad. I'm down. And I don't know if it's for me. And you kind of said, you know what, you're capable of it, just keep going. And here I am, talking to you guys again. And you kind of just have to embrace that, like anything you want to do in life. Like if you're passionate about it and you love it and you have your heart for it's in your heart to do it, like you're gonna go through whatever comes your way. But always fight to show up the next day, no matter how hard no matter how hard it gets. Like just come back the next day, even if you get clapped pretty bad. Like I remember it was that guy. He lost 20 bands and came back the next day. It's crazy. But it's like no matter what, like you have probably gone through harder shit in your life than what is going on in the market. This is just charts, colors, candlesticks, and you pushing buttons, right? You probably you've experienced much harsher realities in life compared to this. So don't make this like the most complicated thing or like the hardest thing that it seems to master. Like anybody can do it if you're willing to just put the time and effort into it. And most importantly, like stay disciplined. Like stay disciplined to your plan and your system, no matter what it is. Like stick to it no matter what. That's all you have. And as long as you did do that, you do the right thing every day. No matter what, you lose or you win. Even if you lose, but you followed your plan, you did the right thing. If you cut your loser the way you plan to, you did the right thing. So as long as you have a plan every single day and you follow it, you're doing the right thing every day. So that's my advice, to just always, always, always know exactly what you're gonna do for the day and just do that. Cut out the noise of like anything that's unimportant to what you're doing. So let's say I trade my system. I don't need to listen to the way other people trade their system because I know mine works, right? Or if you're looking for a system to trade, study it, backtest it. And if you're brand new and let's say you're not willing to put capital into the market yet, open a paper trading account and kind of mess around, right? Kind of just get used to what it's like to execute, to get in, get out. You never have to put up your live capital to learn or to practice or to try to get used to it. Only put up your live capital when like you're ready and you're confident. That's exactly how I would have done it first. But of course, you only learn certain lessons when you have your live capital. When you lose your real money, you learn real lessons, right? So definitely have that system in place and just follow it every single day. And you'll have up days and down days, but in the long run, you want to be profitable. At the end of this year, you want to look back and say, you know what, I made profit this year. Because at the end of the day, like invest in the stock market, you invest in the S&P, it returns on average 10%, right? If you don't make 10% a year from trading, you're better off just buying the stock, right? Think about that, right? If you can't make 10% on your capital for the year, you're better off just buying the stock. So in the long run, from now till December 31st, at the end of the year, you should have a system in place that will get you past that 10% mark. Otherwise, what are you doing all of this for, right? You want to have that system to quote unquote beat the market or generate higher returns than the market can itself from just owning the stocks. So keep that in mind, that everything that we're talking about is system oriented. Like have systems in place and just follow it and leave your emotions out of it so that you're constantly just executing the same thing over and over again. And if it works, you should have great results to look at. And yeah, it's mainly psychological. Yeah, trading in the zone. If you're listening to us, right, everybody go read that. I made 7 buy the book mad long ago. You still haven't read it, but read the book.
I'm gonna read it. 24 books
Everybody
this
read
year.
it.
I'm
Everybody
almost
read
done
it.
with my first one. 24 books this year. That's on.
Okay, good. Yeah, everybody read Trading in the Zone. Either you Audible it, YouTube audio, or buy the physical book or download the PDF. However you get your hands on it, that book will change the way you think about the market. This is all psychological. This is all how you think and your mental. Yeah. So, yeah.
All right. Yo, good night, everybody. See you. If you guys want to learn more about the Greeks and stuff, tap into the Instagram tomorrow. Hunter's gonna lead that. And any comments, questions, or concerns, don't hesitate to ask. And whenever the market's down or boring, we're still gonna ball. We're here to help you guys and learn and grow together. And it's a party. I think Hunter's gonna do it into the market open, an hour into the market open. But just tap in.
Yeah,
Night,
feel free to DM me on Discord and stuff like that. I try to be I'm a teacher, so I'm not super active all the time, but when I can, I'll definitely always answer like DM messages on Discord or just tag me in the Discord and I'll definitely respond to it. But now, like, because I'm not feeling well, I'm able to stay home. So usually I'm not very, very active. So feel free to always just DM me and stuff like that. So yeah.
Yeah, appreciate you, Nick.
Have a good one, y'all. Anytime.
All right, later.
How do I handle it? It's tough. Usually if I'm working, I wake up at 3 a.m. to trade the London Open on the futures market. Teaching is a lot of work. So I try to spend not so much time on the market now, because now I've spent a lot of time in the past studying it. Now it's more so me just being up to date on information and executing as the market passes by daily. Options wise, I mostly like swing trade now as a teacher. Like I'll hold a position for like a few days or like a week. I'm not able to be in front of a screen like during stock market hours. So that's why I wake up so early to trade the futures. So it's a lot of work. I don't recommend it, but in school to teach, yeah, I would say like don't force it though. Like don't force yourself to to have to be active in the market while you're doing, like, if your heart is like where like I love to teach. Like right now I've been bored as hell, so like this has been my like way to take time off and take my mind off like not being at work. But if you really want to teach, don't let this like not necessarily be a distraction, but like don't force doing both at the same time. Like focus on your craft as a teacher, and you can always be an investor in the market. And then trading wise, you can always like swing trade and like do like monthly options or like 1 to 3 month trades, stuff like that. Don't force yourself to be an intraday trader is what I'm trying to talk about. You can't I'll tell you what, I'll try. You can't be a day trader and a teacher at the same time. You can't even do it. Yeah. Do like 1 to 3 month options. Hold it for like maybe like a week or two or like a month, and then you know. And but if because like I trade way less. Like I plan like my trades like very carefully, so it's like the probability of me losing is like very low. Like for example, on Monday I would buy like the price dropped down so hard, I'll buy like a 3 month option and then see what happens. And we just have magically bounced back in the past couple of days. But yeah, don't force yourself to be an intraday trader while you're a teacher because it will stress you out. You'll lose money and it won't work. Not saying that it's impossible, but it's like because you have so much time to delegate to your kids and what you do as a teacher, it's very tough to have the same focus and discipline to trade during market hours to be an intraday trader. It's not worth it, is what I'm trying to say. It's not worth the stress. You can still be profitable, even today, hard to take it. Yeah, exactly. Like, this is something this is not like gambling, but this is something that can be addicting, and you tend to want to watch it all day or pay attention to it all the time. So it's like the discipline to stop or to not do it is so important, so maybe like watch the open hour and then leave it. Yeah, anytime. Good to know that you're also trying to teach too. Good luck with that. It's teaching is a very tough profession, but if you have the heart for it, you'll probably do very well in it. Yeah, be more so just like study it in the evening and kind of like, you can set limit orders and stuff, Yeah, man, mad respect to you, man. It's something that the world needs, but we're underpaid. Not a teacher yet, but one more year. Hey man, you're almost there, next year, or you're gonna be a full-time teacher. So that's good.